For some traders, if you have a strict policy that says, hey, I need to be in a higher time frame trend in order to take this move, then yeah, it may mean that there's nothing you can do. However, if you're a trader that can take advantage of the smaller trend, the micro trend, or if you're a trader that doesn't need a trend and you're able to play from prediction to prediction, meaning that you can still make a prediction within a period where the market isn't in a trend using structure, then you'll still have opportunity. So it all depends on your style as a trader. I dealt with this a lot when I was teaching traders trend continuation trading, and a lot of the traders you know how we identify the 3-point move, starting point, right, to new structure high, and we just went over it on the euro yen. But starting point, new structure high, outside return, or initial structure high, outside return, new structure high, right? We need that 3-point move, that 1 extension, that 2 retracement, that 3 extension to have our official trend. But so I was working with these traders who required a technical trend to take a trade. And they were testing on anything like daily 4-hour, and they got the same thing. They're like, Akil, I was doing my back testing, and I had this year-long period where I couldn't get a trade because we never got into a trend. And I'm like, yeah, that could possibly happen. But the thing we have to remember is that, again, there is always a trend, because there are trends within trends within trends. So again, although a 3-point move looks like this, the reality of a 3-point move actually looks like this, right? So if we take this kind of starting point, right, that move actually looks like this until we get to our new structure, our initial structure high. That retracement, right, looks like that. And that next extension looks like this, right? So there are always smaller trends within every bigger trend. And as a trader, you have the opportunity, if it meets the rules of your trading plan and your style, you have the opportunity to take advantage of those moves, even if you don't define or are able to find a bigger trend that is technically complete. So always good to keep that in mind. Good to hear. That is normal as a trend trader. Just wondering, yeah. And here's the other thing: as a trend trader, again, you don't technically need a trend, right? I spoke about this all the time. So my favorite move is this, right? One of my favorite moves to catch is this: the market is in consolidation, right? We break out, right? Consolidation, accumulation. We break out of that consolidation. We come back to retest. We extend up, right? And then we kind of get into our trend, right? So the best move to capture in this area is this move from here to here. This is the best move. If you're into Elliott waves, that's typically the second wave, which is the longest wave. That is the first extension in a new trend, right? Here's your consolidative area. Here is your breakout. Here is your first retest. This is your move up, your big move. Then depending on how strong the trend is, we'll have more ebbs and flows. So, but this is the move that I like to cue on. I like to ID this move, right? And I would consider this a trend trade. I mean, bigger picture, I don't really care about words anymore. Trend trading, counter trend, like none of those stuff matter to me, but I understand why we have to say it. But this first pullback, this is the area that we want to capture. Now, if we go back to our principles on how we define trend, right? Is this a trend? Because if this is the area that violates, this is our initial structure high, this is our outside return, this is our new structure high. If we're following the rules of how we define a trend, if we need a technically defined trend before we can take the trend, the first spot that we can get involved is right here. But wait, that's after the move that we really want. So calling yourself a trend trader doesn't necessarily mean, it's going to sound weird, doesn't necessarily mean that you need a trend by definition. It just means that it has more to do with how you plan on taking the trade, right? So think about it like this. Trend traders, you're looking to catch an extension. We can put it as simple as that. Trend traders are looking to catch an extension. Counter trend traders are looking to catch a pullback or a retracement. So even if we don't have a technical trend, by entering down here, you're trying to catch an extension. You're trying to catch this trending move. A counter trend trader, let's say there's structure over here or something like that, would enter here. You're only trying to take the pullback. So it has more to do with what your bigger outlook on the trading opportunity is. Does that make sense? So I would define trend trading and counter trend trading more like that versus like actually, oh, I got a 3-point move. Now, again, I'm not saying that 3-point move stuff is pointless. We still need the skill of being able to identify when we're in trend, when we're out of trend. That's going to help massively with entry stops and targets. But you don't have to confine yourself to waiting until that trend is fully complete. Our job as traders is, again, we want to make predictions. And we want to make predictions before the general public makes predictions, right? So if we can identify the potential trend and get involved in it before the trend is in play, we have the advantage of taking part in the better move. Most traders enter late. They see the trend and then they get involved once the trend has already happened, and then the trend is slowing down because all of the smarter money, not necessarily smarter traders, but the smarter money is starting to dry up because they've already made the move. So you're still getting part of the move, but these extensions tend to get smaller the more they go up. So you can still find trading opportunities even if, quote unquote, the higher time frame trend is bouncing back and forth or not complete.